Good morning, everyone. My name is Anne Marie Band. Today is Monday, December the 18th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Taking a quick spy, we can see that we're in clear breakout formations, right? This was a flag, a bull flag that broke and did very nicely to the upside without any kind of retrace, which in itself is sort of like climbing on top of a three-legged chair, but we'll talk about that later. If we take a look at what's going on since Thursday, we can see that we've got a little bit of fading action on Friday. We came into the broad markets early this morning and are trying to hold this measure. So, you know how we do our candle counts? We say, look to the left. Have I stopped heading lower? Yes. Have I broken resistance? I just tested it right here. Yes. Have I pulled back to make a higher low? No. So at the first pass, what we're going to anticipate is that sellers come in and they try to push it below here, because that's the most natural thing, right? Everybody's short. Seller's going to say, I'm going to add to my position because it's a fade, and I'm going to, maybe come down here at the 464 level. Right? But these are the levels that we're looking at. 474, 470, 469.25. This is our decision zone. And then from 464, really, there's nothing but a savage climb all the way up from 460. So my suspicion is there's going to be a battle going on here. Now, let's say the buyers win the battle. What would you want to do with the stop? This is a more risky event, just jumping up here. What you'd want to do is trade into the resistance. That resistance is going to be about 471. And when you've got that 471 area, then you can say, all right, I'm going to take some profit and manage my stop from there. It's going to be a little bit jagged. I think raising the stop to break even might hurt a little bit because it could be very jagged here. But increased risk if you just buy it off of the breakout. Overall trend is up, yes, but interim trend, they're trying to find support, and we've run through this gigantic three-legged chair. All right, so those are the levels to watch. We've got employment numbers, pardon me. We've got housing starts. Because housing's been so hot, might move the market a little bit more than normal, okay? Taking a look at the Qs, still clean breakaway formation. Not sure why my indicators aren't up, but could be connectivity here. So what are the levels that we want to watch for? Okay, we can see since Thursday, the Qs have had a little bit of a topping tail, but man, oh man, they are right up at all-time highs. Big market action right here. What are they trying to do? Looks to me like they're just trying to hold support, right? I don't see any potential breakdown area, but we do see these wicks coming in here, and so I think it's important to check out that 400 area. Now, what are we doing? Have I failed to head lower? Yes. Have I come into support? Well, I'm sort of testing it right now. I'm still above it. But what's happened every time we come in here, in general, is that we bounced. So let the price come to you, and then try for the bounce moving into the upside formation. Listen, if it doesn't work, you stop out, your risk is balanced, but if it does work, you take it into the resistance, cut your position in half, and then watch for it to continue to move to the north or break down, right? That's all we're looking at. If we take a look at the futures, we see a little bit of a different picture because we've got these breakaway gaps moving from one contract to another. So you can see that there is a likelihood that we try to fill in these gaps, but the storyboard is the following. Some gaps fill, some gaps don't, and the strength of the market decides what actually happens. Let's take a look at this bigger rotation. 1, have we failed to hold higher? Yes. Have we broken support? Yes. Have we bounced to make a higher low? Yes. And so here's what this tells me here. I have a contrary statement. I have a statement that says, hey, I can break down, but I have trend in my favor, and I have higher lows. So your risk size needs to be smaller here if you're going to take short. If you're going to take a long, I would say see if it holds and breaks above this zone, and then your stop can end up being the 47.67, sort of where it closed on Friday, somewhere around there. And that's what you want to look for. But the formation says it's going to break lower, but the trend says they're buyers waiting below. A little bit of a dense formation here. Lower liquidity, price action is going to be more volatile, and that housing number might actually have a bigger effect than we think. All right, so what are the levels? 47.50, 47.40. Right here's the top here at 47.33. 47.50 is kind of a round number, so it might not come all the way down to 33. They might try to hold the round number, but 57 is that clear support zone. So you want to be careful because they're battling right there. It's really pretty much of a coin toss in the short run. In the longer run, it's very likely to run to the upside. In the shorter run, we don't quite know, right? So risk is a little bit elevated there. Let's finally look at the NQs. All right, see the gap? This gap is important, but we can't see them on the regular charts. We can only see them in the futures from the rollover formations, and this gap is pretty big. Now, one, have we failed to head higher? Yes. Have we broken support? Yes. Have we come up and tested a lower high? Yes. But we have the same problem. We're in an upward trend, and overall, they're buying the dip. So if you're taking a short here, it's got to be a scalp unless it starts really breaking down. And so look for those levels. I've got them marked there. Just go slow. Use small size. Terrible place to trade in general. Low liquidity, higher volatility, but dips are still being bought. The very last thing I do want to discuss is oil. Here's the thing with oil, folks. 67 should have been the test. Buyers came in ahead of that, and ever since then, it's been moving up. So remember, this particular formation is moving from 67 to 70 to 72 to 73 to 74 to 76. Okay? Good, solid upside pressure event. Everybody's looking at soft landings or no landings, but not hard landings. And so they're trying to form out a bottom. Look at where this chart is on the monthlies. It is still in a very dangerous zone. What does that mean? You've got to manage your risk by waiting for the base where the certainty of motion in the general direction that you want is high and your risk event is low. Are we making higher lows? Yes. Are we making higher highs? No. Especially in this 4-hour formation. So if you say, hey, you just said it was going to 74, I'm buying up here, you just opened yourself up to all the risk between the top of this bar and the bottom of this bar, because what do we know? We know that the last 7 times this has come into this range, 6 times, it's rolled right over. So just follow the probabilities from that perspective, all right? Good luck trading today, folks. As you know, I am away, not going to have any interaction on the platforms at all, and the next time I'll see you is Thursday. That'll be the next video we have up, and then next week I'm completely radio silent. All right, just reminding you of that. Take care and choose wisely.